Now, there's a trend that has been playing out in the financial services sector lately, and that's of corporate debt issues and securitized tradable assets through bond offerings and short-term unsecured promissory notes. One of the most recent of such exercises is the Series 1 5 billion naira 3-year 10-year bond program of FBN Quest Merchant Bank, which was recently listed on the Nigerian Stock Exchange. The head of investment banking at the financial institution, Mr. Patrick Ngbenwelu, joins us now to look at this trend. Good morning and thanks for joining us on Business Morning. Tell us, what's the motive behind the recent push for capital raising exercise across the financial service sector? Your bank has just raised and listed 5 billion naira bond. Of course, United Capital has also just concluded its commercial paper, and now Coronation Merchant Bank is out with its own 100 billion naira commercial paper. Tell us what's fueling this appetite for debt in the COVID-19 economy.
Good morning. Thank you very much for having me on board. One of the things which we're seeing currently in the domestic market is the fact that interest rates at the moment are relatively quite low. So as a result, quite a lot of issuers are intending to take advantage of the current low interest rate environment by locking into some of these the coupons that are available. So as a result, we have seen a spike not just amongst financial institutions, but also amongst a number of corporates. And we have quite a few subnationals who are also going down the same route.
Where does FBN Quest look to channel the proceeds of its bond to?
Well, in summary, basically, the main purpose of the bond, really, the net proceeds we utilized to purchase 3-year 10.5% senior secured notes. But the transaction would enable us to enhance our assets and liability management strategy. We'll be deploying it towards being able to diversify our source of funding and also to help us to expand our loan book.
But do you intend to invest some of these funds in government securities, which seems to be largely aggressive with yields now?
Well, at the moment, the objective really is for us to use the funding, the proceeds, to help us to diversify our loan book and to create more loan assets. But it's worth mentioning, even though, yes, we are allowed to invest in government securities, that's not the primary objective at the moment. But it's worth pointing out that the transaction was heavily oversubscribed, but the main focus at the moment is for us to utilize it towards managing our balance sheet much better.
How much of liquidity do you think your bond will enjoy at the secondary market, given the crowding out effect of the federal government's bonds?
Well, we're confident that to the extent, there are parties in the secondary market who would look to purchase the bond. We know that the appetite will be quite high, primarily because when the issue was closed, it was 2.3 times oversubscribed. So we remain confident that to the extent there are trades in secondary, that the bonds will be quite attractive to investors.
Head of Investment Banking and FBN Quest Merchant Bank, Patrick Ngbenwelu, thanks for joining us on Business Morning.
Thank you very much.
And that's where we'll call it today on today's program. Thank you for watching. I am BC Adebayo. See you tomorrow.